notably softened after a significant decline in the last week, $6 or so coming off Brent since a week ago. Paul Horsnell, head of commodities research at Standard Chartered Bank, sitting in London, in the city of London. He has all the answers to every question, obviously. That's why he's paid the big bucks. Why has $6 come off this oil price in a week? And is that it? Your thoughts on why this very sort of rapid deflation?
Yeah, I think part of it is just, that's what markets do. Part of it is sort of a return to rather like the start of the year, the kind of demand pessimism which dominated the markets, and also perhaps a return to thinking, in the light of the Fed, back to a more sort of macro view of the market. And always been very confused about the Fed. I mean, is it bullish or bearish that if the Fed is going to hike or cut? And this week, I think, was doubly confusing for them in the sense that, okay, so they may not hike. So is that good or bad? Well, the reason why they might have to hike is because the US economy is doing really well and demand prospects are extremely good. So is it positive or negative? And you just sort of feel that confusion, that return to the kind of miasma at the start of the year. So I don't think there's any structural change. I don't think anything's broken. We think US demand, particularly gasoline demand, is much stronger than it's coming out in the very short-term indicators. So it just feels like market developments. The fast money haven't all been on one side of the boat, have all just run to the other side of the boat, and we've got a natural swing down. So nothing broken. I think it should recapture these losses relatively quickly over the course of the next month or so.
Dr. Aldo Flores Quiroga, former Deputy Secretary of Energy for Hydrocarbons at Mexico's Ministry of Energy and Senior Advisor at FTI Consulting. Welcome back, Aldo. Nice to see you. The election's coming up soon in Mexico. We might come to that in a bit, but I wanted your thoughts. I mean, ultimately on the supply side, Mexico being one of the big suppliers of the world, there's just lots of it. And we're reminded at certain times of the year that there's lots of idle supply, and sometimes that idle supply feels like it's OPEC cuts, and sometimes it just feels like there's lots of idle supply on the sidelines. So what's all the worry? Your thoughts on this sort of declining oil price? Should OPEC Plus and others start to be concerned?
I think it's more around the lines of what Paul just said. It's in my terms, the news are contradictory and confusing about where the market is going. Certainly, it's not completely bullish. It's not a bullish signal, right? We're seeing signs of weakening demand and projections that are linked to possible ongoing restriction of monetary policy in the US especially. So that means that that we don't necessarily will be seeing a movement in the production, in the quotas or the behavior of OPEC Plus, if these signals continue as non-bullish as they appear to be.
Vibhuti Garg, Director South Asia at the IEFA. India, of course, is in the middle of the world's largest democratic election. One of the demand centers of the world, of course, India imports 5 million barrels of oil a day, give or take. Where is India at this year? Obviously, election year. Should we expect post-election for there to be an upsurge in demand and economic growth? Where is India's position as one of Asia's biggest demand centers?
I think you have hit the chord right. So India is one of the big demand centers. And even after elections, I think the demand is further gonna increase because there would be more stable government, there'll be policy certainty, which will attract a lot more investments. And more importantly, I think given the kind of policy initiatives that are being implemented, in the last few years, India had shifted from manufacturing to service-driven economy, but now again, there's a big push on a lot of manufacturing picking up. So there are a lot of new industries coming up. And on the other hand, climate change is playing havoc, and we are seeing increasing temperatures, which is also adding to the demand of air conditioning. So, and with rising income, people are increasingly buying more and more air conditioners as well. And we have seen that the load profile has undergone huge change. The peak demand, which used to happen during morning or evening hours, now is hitting at right in the afternoon. So OECD also looking at the current, way the Indian economy is growing, has further increased its future outlook from 6.2% to 6.6%. Just 2 days ago. So there is definitely I would say now India is looking much more bullish, and we will be seeing much more increased demand post-election.
Paul, Standard Chartered has been putting out some notes recently that still very bullish on the demand tightness coming in the second half of the year. Where does this go from? I mean, from that point of view, as we converge sort of to a critical nexus point with OPEC Plus due to meet in early June, which tea leaves should they look at? The idea that there's bigger tightness coming in the second half, or in a sense, a market that has plenty of supply? Your thoughts on why this market's going to tighten and what's the best strategy?
Well, actually, I don't think it's a sort of a future tightness sort of jam tomorrow. It will be all right at difference in the second half. The first half has been tight, so it's just a question of does the tightening continue beyond H1? Most of the tightening in H1 really came through on January not being a surplus month, which is quite unusual. It was a huge surplus last year. It was a bit of a deficit this year. And we think through Q2, the numbers imply that that there is still excess demand at this point. And we just put in some kind of numbers. So health warning. I may use numbers here, but the sort of what we call the call on OPEC for Q3 is somewhere around about we think 28.1 million barrels a day. So that's the amount they could produce without inventories increasing. This is just OPEC.
That's quite significantly above where they are at the moment, right? They're more around 26 or so.
Yeah, about 26.6, 26.7. Okay. So if you just on those numbers, then if there wasn't any increase in Q3, there would be a further stock draw. And I say further because we already had large ones through Q1 and Q2 of say 1.5 million barrels a day. If you use other numbers, the OPEC Secretariat balances imply roughly 800,000 more of a draw than that. They got 28.9 roughly as the call on OPEC. The IEA is about 800,000 less, so we're sort of in the middle of the two. The IEA is 27.3. So read on all those numbers, whether you go to the most pessimistic, the IEAs, or the more optimistic, the OPEC Secretariats, the market can take more OPEC crude in Q3. The problem is that at current prices and with current market sentiment, the way the market is trading, the way analysts are talking of demand's weak, there's a huge surplus. OPEC is not going to add crude into the market when it's trading sub 85 and sentiment remains extremely poor. So in some sense, I don't think OPEC necessarily is going to look at the numbers as the key thing. It's important information. But no matter how strong the numbers are, you're not going to add into a market that's trading in a very different way and has probably got the fundamentals perhaps a little bit wrong. So in that sense, it's market sentiment and the price signals leading up to the meeting, which are probably going to be the most important. But in terms of the tightening, no, it's not the sort of the usual, it'd be stronger in H2. I think H1 is actually the strongest half of this year, primarily because ultimately, I think prices will rise and OPEC will be allowed to put that all on the market. But I think very strong conclusion here, it's not that OPEC can't afford to increase production because the demand isn't there. The demand is there quite clearly, but they may have to phase that or be a little bit more cautious just simply because of the way the market is trading. At some point, the market may start believing and seeing the numbers and lose this return to demand pessimism. But for the moment, it's very hard to add supply into that sort of a downbeat market.
If I
One of the things, please, Dr. Aldo, yeah.
Just the things that the IEA lowered its projection for demand for this year by just about 400,000 barrels per day.
The
Um,
IEA have revised upwards their 2024 they had forecast at the beginning of the year demand growth of 1.2,
They went to
and
1.6.
they went as much as, I don't think they went as high as 1.6. I think they went to 1.3 or 1.4. Maybe Paul, you could correct on that.
No, well, Aldo's right on the EIA rather than the IEA.
EIA, sorry.
US EIA.
Did you say?
And yeah, Aldo, you're completely right on that. In their last report, they did revise down 2024 demand growth by about 400,000. But the reason why they did that was because they increased all their baselines in the past. So there was a lot of added on to past years, and they decided not to add that into this year's baseline. So rather sort of confusingly, they revised the absolute demand number upwards, but they revised the growth downwards because they put more extra demand into the 2023 numbers. So they weren't saying demand is weaker, they're actually saying demand is stronger, but they're now just sort of reallocated from the growth. So that was one of the more confusing EIA reports ever, I thought. But what you said is absolutely true for them.
But still, the trend, the IEA is projecting a slowdown for 2024 and on to 2025.
Yes, and slower than 23, but their as Sean was saying, their 24 number started much lower. Somewhere, I think was it 700,000, 800,000, and you know they
went up,
pushed it all the way up. In the very last report, they pulled it down a little, but
exactly.
Overall the trend has been pushing up.
Where like 6 months of incremental increase in demand growth since October, I think.
And then this projection of a slowdown, which seems to be mild, but again, it's part of the mixed signals in terms of how to read this moment. And I think
one of the mixed signal, sorry, Aldo, just to add to your thoughts, I wanted to ask you about is where the Americas are going, because obviously last year they were a big added supply source, and this year, I mean, speaking of range of numbers, there's a big range about expectations from the Americas in terms of new supply.
In terms of new supply, the number I've seen in the aggregate is about 1.2 million barrels per day. If you add Canada, the US, Brazil, and Guyana, which would be the main, obviously the key sources, with still the US leading. What I think part of the, I mean, to add to the mixed signal story and uncertainty, we're having elections in the US, elections in Mexico. We just mentioned elections in India, and they will mean shifts in policy. They will affect, I think, also calculations for the course of economic policy in general. So it's hard to ascertain where these two factors will be falling and how this will affect the macroeconomic performance in North America, therefore demand. Although we're seeing that supply will remain from this region strong and can make up for whatever OPEC doesn't decide. If OPEC decides to keep production where it is and demand continues to increase, we can have enough production from the Americas supplying the market.
Vibhuti, you wanted to jump in there? I welcome your comment.
Just wanted to add, India especially, has been giving a lot of push for electric vehicles. So the dynamics might not change immediately, but in the next few years, the dynamics will change when we have more and more EV adoption. There are some bottlenecks in terms of, having the right policies to push the kind of EV infrastructure charging is concerned. So I think once that battle is won, in terms of, companies, especially Indian companies who have coming up with different models, we are also tying up increasingly. I mean, there were talks when Tesla is going to set up its capacity here, but it looks like it's been pushed now. But as I said, the dynamics might change completely when there's a big push. We are already seeing last year there were more EV sales that happen in three-wheelers as well as in the four-wheeler segment than your normal ICE vehicle. So I think that dynamic is something which one needs to look out for when we are looking, especially for huge oil demand from developing nations like India.
Vibhuti, I wanted to ask you an update on something that's kind of gone off the radar screen in recent months, India's imports of Russian crude oil. The infamous discounted Russian crude oil that seemed to be very popular last year. Has it got off the radar screen because it's no longer popular, or it's just become normalized? What's the state of play with India's import of Russian discounted crude?
When the war broke out, India did get huge discounts from Russia, which was somewhere around 23%, but now it has gone down to 8% on an average. And with all the uncertainties concerned with the Red Sea route, India has been looking at, importing more oil from the Gulf, the Middle East, more than, Russia, even after it's being given around 8% discount. So definitely, it's not like it has gone off the radar, but the volumes have gone down because the attractiveness in terms of, the discounts that were offered initially versus now is no longer there. So India is looking at other partners, other countries to import oil. And recently, we have seen that there have been huge savings in both financial year 22-23 and 23-24 to the extent of $5 billion and $7 billion. But if the global, the crude prices go up again from $83, $84, which are the current prices, to $90, $95 again, then we will see an increase in India's import bill leading to current account deficit, higher current account deficit. So India will always be very, very, I would say, concerned in terms of how the prices are moving. And in my previous discussions, I've always emphasized we are a price-sensitive consumer. So as whichever countries are being able to offer good discounts, I think India's imports will go up more from those countries. But in the recent past, yes, Russian imports have gone down and imports from the Middle East have gone up for sure again.
Paul, on that point, I mean, the Middle East exports into Asia, obviously China being the big 10,000-pound gorilla there. The outlook for, as OPEC Plus does look at its options for the second half, there's many factors they have to weigh into that. One of them is China, obviously in Asia as a whole. We've seen OSPs rise into Asia over the last few months. The optimistic outlook, where's China looking as the sort of the world's largest oil importer 4 months now into the year? There's a bearish tone on China's sort of general macro picture, but ultimately continues to have a pretty decent heartbeat.
Yes, and I think our macroeconomists have been, actually very encouraged by the macro data so far this year. It seems pretty robust, pretty resilient. So if you like, and I think generally across markets, some of that, shall we call it tail risk concerns of really hard landings in China, I think some of that is starting to recede, and now we're sort of getting into precisely what the numbers are, how strong demand growth has been. I think the early signs are that it's roughly as anticipated. So not as much in terms of year-on-year growth as last year, but still a perfectly reasonable numbers, just somewhere in the region of, say, in demand growth terms, sort of 3.5%, that sort of a scale. So okay, but I don't think anything particularly different from kind of midpoint expectations, but with some of those concerns about the more extreme hard landings maybe disappearing at this point.
Let's go to the survey question before we get some insights on elections in Mexico and India. The survey question today is essentially, what's triggered this $6 drop in oil price in the last week? Is sudden sort of drop off, having broken out of the range we're back into. We thought we had broken free of the high 70, low 80 range on Brent, where we were much of the first quarter, and escaped up to above $90 a barrel for a few weeks in the high 80s, low 90s, but now have been pulled back. Is that because of the deflating geopolitical risk? Because finally the sort of the postponement of Fed cuts has been bedded in and acknowledged by all stakeholders, because there's idle supply is plentiful, and that's sort of been suddenly kind of come to everybody's realization, or a global macro weakness. Which of these four do you think has had the biggest impact on dropping the oil price a little bit like a rock through water in the last week? Aldo, I wanted to get your views and insights on the election in Mexico. First time in either case, there's going to be a female president of Mexico. But in general, what's the election outcome looking like? What's its ramifications for your oil industry and hydrocarbon industry as a whole in Mexico?
So we're exactly 1 month away from the elections. We're going to have not only a woman for the first time, but for the first time an engineer, either an energy and environmental engineer or a computer engineer in charge of the presidency. So that's also a big shift. The overall energy programs of both candidates look very similar. They are both very favorable to the green agenda. They have both proposed that Pemex gets involved also in greening not only its supply chain, but its output. One of the candidates, the leading candidate, is proposing that Pemex gets into the lithium business and also invests in renewables. The other candidate that is running behind, she's proposing that Pemex goes also into renewables. So what right now seems to be the most likely scenario is that the candidate of the ruling party right now wins the election. She has about a 24-point lead right now in the polls. They might be wrong, obviously, but that's what prediction markets are betting on a victory from that from the official candidate. That's you will see that they're predicting with 99, 97% probability that victory takes place. If that's the case, we will be having a government that continues to emphasize a more nationalistic agenda, with the two national energy companies for oil and power leading the sector and projects. That will not necessarily mean that we will not see more private participation, but more likely we'll be seeing more public-private partnerships. And we will see a big effort on the energy side for investment, because Mexico is a prime candidate for nearshoring, given the China-US economic rivalry. And for nearshoring to really flourish, we need an expansion of energy infrastructure in Mexico. Certainly electricity is going to be key, and that will be emphasized by either of the candidates. So to summarize, the most likely scenario, we're going to keep seeing a more state-oriented, centrally planned mindset for the energy industry in Mexico, but one in which it's also very likely that we'll see more public-private partnerships.
Vibhuti, the same question for you. That obviously we're deep into the Indian election. It goes on for a month, halfway there, I think, more or less. It looks like, I mean, even in the clear that Narendra Modi is immensely popular, definitely going to win the election. But as is the case in parliamentary systems like the UK and India, he's going to be and a big winner with less than 50% of the vote. And actually, Narendra Modi has never won more than 50% of the vote. But in a parliamentary system, you can still enjoy a big majority with that kind of first past the post system. So my question ultimately is, how past the post will he be? How first past the post will he get that super majority? What's it looking like, and that power in which to make some big changes?
Well, elections are always a bit unpredictable, but this time it looks more predictable. But at the same time, while the Prime Minister is claiming he'll win more than 400 seats, but it could go either way. But it will be closer to somewhere in the 400 range, if not the exact majority, as you said, but closer to the majority. But they do have lot of tie-ups with some parties, and that's how they will, any party which is not like fully has won the more than 50% will likely come into power with the help of smaller parties, because in India it's a lot fragmented. It's not just two parties who are fighting against each other, but there are a lot of other parties with very small numbers as well. So I think with their support, they will come into power. And in terms of, how do we see it impacting the energy policy, I would say, while there is some push gonna be on the fossil fuels, but there will be a bigger push on clean energy is what we are expecting this time, with the with a lot of, India playing big cause with all the floods that happen at times and the kind of weather change that we are witnessing. So there is a big push. In fact, in the first quarter of this year, India added about 13.5 gigawatt of capacity, and more than 70% of it was renewable energy. We are still adding coal. It's not that we are done away. We are completely doing away with fossil fuels. We are still adding more fossil fuels because there is a big demand to meet. But the rate of growth of fossil fuel capacity addition has gone down and is expected to go down tremendously. And renewable energy, along with battery storage and green hydrogen, is likely to play a bigger role. So that's what the expectation is. And I hope whichever government comes into power live up to that expectation.
Paul, just to wrap it up, the outlook obviously in Europe as more money goes into Ukraine to fight the war against Russia, and we have the upcoming OPEC Plus meeting. Obviously, Russia is the big non-OPEC member there, partnership with Saudi Arabia. Which is about, it would appear, according to New York Times reporting, to finally do a big deal with the US. Connecting all those dots that seem like very big changes to the status quo, do you think they are, or they will add up to anything that changes the status quo for OPEC Plus?
Not immediately. I mean, it's all important, and there's a continuing diplomatic process, and this is an important step in strengthening part of that kind of framework of diplomacy. But I don't think there's any immediate impact there in terms of OPEC Plus. I mean, the equation is as before. OPEC Plus is working extremely well because of cohesion, because of while there's still work to be done in some areas because of very high levels of compliance, and it stands together or it doesn't stand at all. And so in that sense, Russia's role is as before, is to come through with its commitments, but there's no political level, I think, beyond that. This is an economic self-interest in terms of the OPEC Plus connection. They need to be part of the game, otherwise, we've seen what happens when the thing falls apart. So in that sense, probably not. But again, it's actually the same as our previous conversation. I think the main thing about the market now is it's just not giving OPEC Plus enough credit for the tightening that's already been achieved, and from that sort of underlying strength of markets. And so part of the job is in that communication feeding through into the June meeting for the markets, just to say, hang on, now actually they're doing a very good job in terms of drawing down inventories and keeping the market tight.
Well, there's a survey result, global macro weakness drawing most of the views, but nothing too convincing in that result. We'll post that on social and see where it goes. OPEC will be looking to see where the answers of all those questions are. We wrap up with Brent crude oil still trading below $84 a barrel at 83.79, ever so slightly up a few cents on morning trade in Asia. No big change there, but seems to have found its first quarter comfort spot of low 80s, and maybe this is where we'll sit for a while, as we did for most of the first quarter, until some definitive new wind comes, and that may be the OPEC decision in 1st of June. Until then, we'll track sideways. Paul Horsnell, thank you so much, as always, in London, Vibhuti Garg in India, and Dr. Aldo Flores Quiroga in Mexico. Thank you so much. Really appreciate your insights this morning. Have a great weekend, everybody. We're back Monday morning at 10:30 UAE time with Brent, as we say, trading just below $84 a barrel. Thank you very much.
Thank you.